Right now, your wallet is probably feeling the pressure. Between stubborn interest rates and the climbing cost of everyday living, building wealth can feel like an uphill battle against the economy itself. But a recently signed piece of legislation offers a major counterweight to those costs. It's called the One Big Beautiful Bill Act, and it introduces an updated 2026 tax landscape designed to protect your income. This legislation takes many of the popular tax cuts from the 2017 Trump era and makes them permanent, altering the long-term math for keeping the money you earn. These provisions are legitimate, permanent tools written into the tax code specifically to help you retain your earnings rather than surrender them to the Treasury. By understanding exactly which new deductions apply to your situation before you file your return this season, you can legally reduce your final bill by thousands of dollars. Navigating this updated landscape provides you with an active, legally sound defense system for your personal wealth preservation. The first major win is a permanent boost to the standard deduction, significantly raising the floor on tax-free income. Because this baseline is permanently higher, you can skip tracking receipts, lowering what you owe without the complicated maze of itemizing. Beyond the standard deduction, the new code also introduces substantial enhancements to the child tax credit for 2026. For families managing rising costs, this enhanced credit returns more capital directly to parents to help cover everyday household expenses. These broad, foundational updates automatically shield a massive portion of middle-class income before you even need to consider advanced financial planning. For workers in tipped industries, a new provision lasting through 2028 diverts qualified tips completely away from your taxable income. Qualified overtime pay can be deducted right alongside those tips, ensuring your extra effort translates into more take-home pay. Retirees also receive new protections through a brand new senior bonus deduction for anyone 65 or older. This bonus is worth up to $6,000 for single filers or $12,000 for married couples filing jointly, acting as a shield for your retirement income. Homeowners in high-tax regions also gain breathing room, as the state and local tax deduction cap has been increased to $40,000. These targeted levers help insulate specific, hard-working demographics from the dual pressures of localized taxation and persistent inflation. Some of the highest impact updates in the 2026 code apply directly to business owners and investors. The qualified business income deduction is now locked in permanently. It allows freelancers, LLCs, and S-Corp operators to shield a full 20% of their pass-through earnings from federal income tax. Entrepreneurs can also utilize the permanent 100% bonus depreciation rule to accelerate their growth. Instead of slowly spreading deductions over years, you can now write off the full cost of major equipment immediately in the first year. Reinvesting those massive upfront savings back into your operations creates a compounding growth curve for your business. These permanent deductions transform the U.S. tax code into a government-subsidized growth engine for successful business owners. High-yield tax strategies only work when you are proactive. You must structure your income properly before the filing deadline to secure these wins. Traditional moves like maximizing your 401k or contributing to a health savings account pair with the new 2026 brackets to drive your adjusted gross income even lower. Because the IRS expects more Americans to use these provisions, maintain exact records. Proper documentation ensures every benefit you claim is fully legal and audit-proof. For more complex moves like Opportunity Zone investments, which offer strong deferral benefits under the updated rules, consult a qualified tax professional to ensure your execution is perfect. Understanding the 2026 tax landscape is your most effective tool for keeping your hard-earned money. Tell us your biggest takeaway in the comments. Hit subscribe for more practical finance strategies, and I'll see you in the next one.